Well, good morning, everyone. It is the 27th today of January 2016. My name is Thomas Ryan, and I am the founder and publisher of a series of daily and weekly trading opportunity newsletters. We publish them every day, 200 trading days a year. So almost every market day, we put an email into your inbox giving you hand-selected trades that you can trade on either a daily or a weekly time frame. 30-day free trial, ttryanco.com. Come on, stop by. We don't take any credit cards. You don't have to give us anything except an email address, and check us out for 30 days and see if you like it. Today I'm going to do another one of these videos that I've done before, taking a look at TC2000. This is a 2-day swing trade that was not in the letter that I just did myself personally over the last couple of days, and so I thought I would show you another one of my favorite trading scans or screens, whatever you want to call them. In TC2000 they call them easy scans. So if you're a new TC2000 user and you want to get some tips on some winning scans, then this is what we're going to do real quickly here today. As I've said before in many of these other videos that I've done recently, if you're going to get involved in day trading or daily swing trading, the key is, first of all, to find the trades. And that sounds like a simple thing, but it's not so simple when there are 8,000 plus stocks out there. So I'm going to tell you a little bit about how we do it and what we find to be a winning approach to this. First thing is to make sure that you have always got a good sense of, as best you can, what the market is doing. And this morning we had a big move down in the market, which is not uncommon because the market is basically negative right now. But then the market quickly bounced back up again, and we've got a 2 o'clock Fed meeting coming up today. So, you had a trading opportunity in the morning to go short. The market moved immediately back again long, so this was quite a lot of whipsaw going on today, a difficult market to trade. But I had a short open from yesterday, so a 2-day swing trade on EW Edwards Life Sciences. This was a technical short. This is a very popular medical device stock. A lot of people love this stock. There are a lot of longs in this thing. It has a lot of power to it. I think it's on the IBD top 50, although I'm not an IBD subscriber, but there are a lot of folks in love with this stock. So shorting it can be a very tricky thing. So what I'm going to look at now is MACD divergences. MACD divergences and other technical divergences from indicators can be successfully traded. The problem with divergences is that although they are very powerful and you can get a big move out of them, the timing is very difficult. It's very hard to find out when these divergences are actually going to materialize into a winning trade. So I'm going to show you a couple of ways to kind of help make that a better, more reliable reality. So we're looking at EW, and I'm going to show you the scan. Here's the scan that I use. So I'm calling this my weekly MACD diversion down. And these are the components that are in this scan. The first thing we're looking for is the exponential moving average. The weekly moving average is below price. Okay, so we are looking at, on a weekly basis, the price is above the moving average. How do we do that? Again, I'll show you real quick. We can take this right here. Here's the 12-week moving average right here. We do a right click on that, and up comes these opportunities, create a scan condition, and we want the exponential moving average versus price. Left click, exponential moving average is below price. So that's, and we add that to our scan right there. Add to conditions, and I don't need it in here twice, so I'm going to get rid of it. The next condition we have is the MACD is below the signal line. So let's take a look and see what we've got there. This is not a perfect way to find these, but it's a pretty good way to find them. There are other ways to do it, but I'm just going to show you this one right now. Create scan condition. MACD is below the signal line 9. Add to existing watch list or scan. Add to conditions. So again, I don't need it in here twice, so I'm going to get rid of it. So this is a very simple scan. We're looking for a MACD that is down, and we're looking for a price that is up. And if you use this scan, you're going to find pretty much a lot of things that hit this kind of divergence. I also only scan on the S&P 500. That's it. I don't do anything else. I don't do small caps. I don't do, penny stocks, whatever, all that stuff. It's just not me. And that's another thing that's critical, I think, for everybody. You got to know who you are. You got to know the time frame that you're dealing with. Are you a day trader? Are you a swing trader? Are you more of an investor? Are you looking for longer term positions? You don't have the time to deal with the market every day or the inclination. Know yourself, know what you're interested in, know what your objectives are, know what your time frame is. Never confuse your time frames. And if you're not going to trade, highly volatile stocks, then don't trade highly volatile stocks. That's another form of greed. Fear and greed, the two biggest enemies of trading. Fear and greed. Always stay away from both of those. So we're looking for something, in my case, I'm not going to be, I got as much fear as the next guy, and I got as much greed as the next guy. So I have to manage those things all the time. And the best way to do that is to start with a scan like this, and I can start going down this list, and you'll see what comes up in this scan. There's a little divergence going on right there. It's not particularly a long time frame. There's a good one right there. Back out a little bit, and look what you have. Huge divergence over the last 2 years on this stock Nielsen. It's not particularly a pattern that I love. That's not one. That's not that great, not that great. And I just start going down the list here, and I rank this here also with overboughts, so you can put your stochastic over in this column if you want to start going down stocks that are just massively overbought. That's one way to do it. That's a pretty good one there. That's a pretty good one right there. Although Kraft Heinz, I'm not going to play around with that. I think that's a Warren Buffett situation. So here's another one that's interesting. Electronic Arts, very popular, very strong long-term uptrend, which has now kind of topped out, and you've got a little bit of a, you could call this a triangle, you could call it a descending wedge, you could call it a lot of different things going on here. So it's not particularly clear what's happening. But when you combine the fact that this has got a massive down spike going on here on this MACD, and the stock is still up here flat, overbought, overbought weekly, what's going on daily? Well, look at that. This stock has had a 1, 2, 3, 4, 5, 6, 7, 8, 9, like a 10-day run up here. So it's overbought on a daily basis as well, as we can see on the stochastics. But the volume is still, pretty good on this. So this is probably not likely to dump out here anytime soon. It's a powerful stock. A lot of people in love with this stock. It's had a good run up, so this could be a good short. And that's another thing. We're looking at the short side of this divergence. So let's go down and look for some more here. There's a pretty good one right there. Cognizant Technology, maybe a little kind of head and shoulders top forming over here potentially. That's something to maybe put on our watch list. It's got a nice downtrend going on here with a big run up, narrowing range, and dropping volume. I would say this would be an interesting short candidate, but the next thing you have to do is you have to remember where is the market, because when you're picking big tops like this is a strong uptrend. This stock is in a strong uptrend. Are you going to fight that uptrend? Not for any kind of long-term drop-off, but you might get a day trade or two-day swing trade on this thing dropping down a little bit right in here. Wouldn't be at the top of my list, though. So let's go back to the one that I just did the other day, which is EW, Edwards Life Sciences. And why did I short this stock? Okay, so we start building the story. First of all, over 6 months, whatever that is, 10 months, maybe 12 months, the stock has been losing momentum. And you can see a lot of volatility shaping up here in the monthly chart. A lot of volatility. What is that? That's a lack of conviction. People are not sure what's going on. This stock, you've got buyers in here who are sitting on massive gains. They've doubled their money, more than doubled their money in the last 2 years on this stock. And they're sitting with some big gains. And they're sitting there going, is this going to continue? This market is awfully troublesome right now. So do I stay in or don't I stay in it? Well, guess what? In the next lower time frame, in the weekly time frame, that doubt and that lack of conviction starts to show up in the MACD. And it's also showing up in the RSI down here. So we see a declining RSI, lower highs, lower lows in the RSI. We see the MACD clearly in a divergence going down right here, while this has gone straight up. So is the timing right for this kind of divergent short? Let's see. Well, sure enough, here we have the same situation that a lot of stocks are in right now. We've had 1, 2, 3, 4, 5, 6, 7 days straight up. Nothing goes on forever. So if we're looking for shorts, we want to find things that have been moving up recently and maybe are ready for a pullback. So what do we look at? Well, next thing I start looking at is where exactly is it on the daily chart? Well, conveniently, Edwards Lifesciences is in the middle of this, has come right back up into this congestion zone right in here. Let me clear some of these out of here so you can see this a little more easily. There's this top. So Edwards has come back up to this top in here. And what's happening with the daily MACD? It's completely divergent. So it's overbought with a daily divergence. It's overbought with a weekly divergence. It's overbought with whatever that is, 8 months, 9 months of declining MACD histogram, which is momentum. So the momentum is leaving the stock. It's divergent in the MACD, and it looks potentially like it's well positioned on a daily basis to actually have something happen over the next couple of days. And the other thing that I think is very helpful, if you look in here, you see what's been going on lately with the volume. Well, sure enough, the green volume on Edwards has been, all the green days, the volume is anemic. There's a decent one there. But all the red days, the stock is got a lot of down volume going on there. So there are sellers out there in the woods that are starting to get rid of this stock. And I think that's reflected in the volatility that you see going on here over the last year. So is this the right time to short it? Well, you know, if you wanted to day trade it, it turned out to be, yeah, a pretty nice little run. So I got in the stock right here, right about here, and it wasn't this 79.91. I think it was right about there. And unfortunately, I had to sit on it up into here, into some losses, bigger losses than I would have liked. But it came right back again later in the afternoon yesterday and popped up again a little bit very late in the afternoon and then collapsed this morning. So I rode this from about here down to here. You know, that depending upon how much position size you're using was a nice little win for a day trade. Got out of it down here and then it popped. So this is something that I think you could continue to short. I might short it again this afternoon. We'll see what the market wants to allow. Today being a Fed day is not a day probably really to do much else. Maybe at 2 o'clock Eastern, another half an hour from now, there may be some significant movement if the Fed decides to reverse itself, who knows what. But those are all the elements I'm looking for in a MACD divergence play. You want to make sure that you have a very clear, very distinct downtrend on the weekly if you're a day trader. Very clear. Then you want to check your timing and make sure that it all makes sense. You had declining volume down here as well, and then the red volume started showing up. It's all good signs. This stock is probably going to have at least a pullback, I would say, down to this 200-day moving average, maybe even as far as the 200-week moving average over the next several weeks, depending upon what exactly happens in the market. But this has to get resolved. And if you're looking at my another thing I do here, which is, I think, very helpful, I suppose it's debatable as to whether or not it shortens some of my gains. But these are what I would call pivot points, points at which there was there was a change going on. Here was a peak right here at 75. That's not 75. That's, let's put it back over on this screen again. At 70. Is that 70? 78. You see that there? 78.81 was another point where you've got a pivot going on there. The reason it's a pivot is because it's sitting at the base of this support right here. All these things bounced off here, or there was some attempt at support right in that line there, and then there was resistance right here. So you had a support resistance pivot going on right at 78.01. That would be really my next target, I think, for this. And we'd see what it does there at 78.01. If it clears through that and continues on down, the next one I would look at would be 75.88. Again, you see resistance right here. You see support right here. So this is a pivot support resistance point, 75.88 on EW. So I use these as targets to see, exactly. And there's the one up at the top also, 79.91. You had a pivot going on right there. These things based around that price level. There was some resistance right there, and then it fell. So around 79.91, and sure enough, you see the action there at 79.91. Some resistance to any move back up again after it bounced this morning, and it's falling back down again. So that is a weekly MACD Divergence short. And that's how I played it this morning. We do these sometimes in our newsletter, but not all the time because they simply are not, they're too difficult. You have to manage them very carefully every day. And you probably can't really use that much risk because it's very hard to be very accurate with them, so you have to use smaller positions. If you like doing this and you like listening to what I have to say, come on, hook up with us. 30-day free trial, no credit cards required. Love to have you join us.